What's going on, everyone? Today is the 23rd of August, 2023. Man, let's talk about AMC real quick because the shares of the stock cratered. Yeah, it did. You guys can see that it cratered ever since earnings. And then it had a couple of days where price went up. But then right there on the 21st, market crashed 23%, 24. And then yesterday, the market went down another 18 and a quarter. Look at this article from CNBC. Take a look. AMC shares crater as investors brace for stock conversion. Congratulations to all of the AMC apes out there who pumped and kept AMC supported for the duration of the pandemic. Congratulations, because that at least alleviated some pain of AMC filing bankruptcy, because all the hype, all of the buying that was done for AMC did keep it afloat for that time period. But now that time is gone. And now you have Adam Aaron around talking about, okay, I still need to pay all my massive debt. How can I do it? The only way that I can do it to keep this business from going through bankruptcy anyway is that I need to create dilution. I need to make more shares and I need to issue it into the market. This is what this conversion is all about. It's not about the retail investor. It's not about the short squeeze. It's about Adam trying to figure out ways that he can keep this business from filing for bankruptcy and to keep all of his internal stakeholders happy. All at the welfare of the AMC apes. Now, take a look. On Friday, the movie theaters chain preferred equity units, dubbed APE, are set to be transformed into common stock just 1 year after they began trading on the New York Stock Exchange. This was Adam's plan the whole time, was to eventually take these apes, these shares, and convert them to AMC shares. These preferred equity units are a workaround of sorts and free AMC up to sell additional units of stock after investors who fear dilution rejected the company's efforts to issue additional stock last year. Now, it frees up capital. It gives them money that they can pay their debts. AMC raised billions during the COVID pandemic selling new stock, which aided the company in paying off its debt and staved off bankruptcy during that time, when movie theaters were closed and had limited product to screen to audiences. So like I said, I think Adam appreciates the AMC 8 movement because it did keep him afloat during that time. But now, AMC is planning a 10-to-1 reverse stock split of its common stock on Thursday. The company authorized share count will increase, get this, once this conversion is through, it will increase their share count to 550 million shares from a prior post-reverse split of 52.5 million, allowing AMC to issue more than 390 million shares. 390 million shares. This is what Eric Handler, who is a managing director of Roth MKM, wrote in his research note for AMC. That's dilution right there, if you guys didn't know it. That's why the value of AMC stock is down to where it is today. If you take out the supply, the stockpile of these shares, then the price of each one stock will be worth more. But the more that you add, the less value each one has. That's why the market is down massively the last 2 days. It's because it's trying to get in line with what the value of APE is too. Check this out. You have CNBC is trying to give us both sides of the market. Someone who thinks that this is a positive thing and then someone who thinks it's negative. Now, Handler, the guy that I told you about earlier up in the article, he is negative about this conversion. But then you guys can see we have Eric Wold, who is an analyst at B. Riley Securities. Now, this is what he told CNBC. Quote, while this is expected, I think it overlooks the opportunity for management to also utilize that access to capital and the still elevated valuation multiple to pursue additional acquisition and expansion opportunities outside of the exhibition space. All that just to say that it gives them opportunity to pay off debt and to possibly do any merchant acquisitions and try to go into any unsearched areas that movie theaters chains hasn't done yet. It gives them the ability to continue to try to do different things, at least to show forth that they can be profitable. That's pretty much all that he is trying to say. But then on the other hand, he has a price target at this. Wold currently holds a $4.50 price target for the stock on the high end of analysts who cover AMC. Meanwhile, Eric Handler, the guy above the article, is on the opposite end. His price target is just what? 50 cents. 50. This is what caused the short squeeze the first time, was it not? It's because these analysts thought that the valuation AMC was so low and that it should be bankrupt. If a stock is going to be worth 50 cents, you might well say that you need to file for bankruptcy. The exchange won't allow you to trade if your valuation or the share price of a stock is at least $1. If he's saying it's 50 cents, then he's trying to say that AMC is going to go bankrupt. My negative view towards the shares is really a valuation call. This is what Handler said. We continue to believe the company shares are trading at an irrational valuation. It's too high. That's what he's saying. It's too high. He also noted that AMC would need to generate nearly $1 billion in adjusted EBITDA to justify its current market capitalization, a figure that is 78% higher than Ross NKM's forecast for 2024 and 5% higher than the company's all-time high EBITDA of $929 million generated in 2018 before the pandemic. And now here we are post-pandemic. Many individuals aren't going to theater chains like they used to. So how can they actually push up that EBITDA? Still, liquidity concerns have been alleviated for now. So he still acknowledges that, hey, yeah, since this conversion is going through, it's going to give Adam a couple of more days. Well, I can't say days, a couple more months, a couple more years to actually to pursue keeping AMC afloat. So he's still giving them time. He recognized that they do have time because they do have increased liquidity by the conversion of these APE shares to AMC stock to where they can possibly stave off bankruptcy. Hey, only time will tell. But the chart has been telling us a long time. We're right back to where we were in AMC back when the market was trading around all those lows right here. See that? This is before the short squeeze even occurred. And he has a target of 50 cents. And the other guy has a target of 450. So, Adam, you have a boatload of cash about to hit your pockets for AMC. What you going to do with it to bring value back to the shareholders? That is what the market is going to look forward to over the next 2 or 3 years to see if it can turn this around. And with this much money that he's about to get access to, it'd be crazy to see that he can't. But if the debt continues to increase and more people are not going to the theaters, and let's say that COVID comes back again to rear its ugly head, then the money that he has access to won't help. All right, give me your thoughts though. Make sure you maintain the profitability. Hit that like button. And also subscribe to the channel. Make sure you maintain the profitability and trade different.